Have you ever wondered how startups get the money to grow before they are profitable? Let us look at the role of venture capitalists. Venture capitalists, or VCs, are professional investors who provide funding to startups in exchange for an ownership stake in the company. Because startups are risky, VCs expect that most of their bets will lose money, but they hope one home run will make it worth it. VCs do not just hand out cash. They look for massive potential in markets where a company can scale very quickly. Unlike a bank that wants a loan repaid with interest, a VC wants a piece of the company to gain value over time. Funding happens in rounds. As a company proves its model, the investments get larger to fuel expansion. Successful venture capitalists often act as partners, helping founders navigate hiring and strategy to reach the next stage. Understanding how startups are funded helps you see the bigger picture of the economy. Like and subscribe for more finance basics.